as fears for a banking system in the U.S. economy.
Yeah, I mean, this is obviously the number one topic going on in the world
Yeah.
right now. It's causing a lot of fear in the markets. These regional banks got absolutely destroyed yesterday on the stock market. First Republic obviously was one of the, I think, the second largest bank in the United States to collapse since 2008. So, I mean, it's obviously instilling a lot of fear, I think. But this week, yesterday, was Pac West, I believe is the name of the bank. They are having major issues as well and needing to borrow funds and sell assets. So there's a lot of rumors that they may be getting bought out. There's also rumors of many other small banks that may be getting bought out in the near future. So I think this trend will continue in the coming months and weeks. And I mean, I think we're at 4 banks now. I mean, by the end of 2023, my guess is you're going to see 50 to 100 banks fail.
Wow, that's scary.
And it could be even much, much larger. I mean, between 2007 and 2009, you saw hundreds of banks go down. So in 2008, there were 11,800 banks in the United States, and today there are 4,000. I think at the end of all of this, we will be down to less than 100 banks is my guess, and who knows, we may even get down to where it just goes down to 4 major banks or 5 major banks, similar to Canada. So, I mean, I think a lot more pain is coming, a lot more bank runs are coming. People are going to start pulling their money out of the banks in the United States, especially the smaller regional banks, and then putting that money into larger banks like JP Morgan, because JP Morgan seems to be buying up all these little ones, and that's just going to continue. So it's just going to make the bigger banks stronger and make all the smaller banks disappear. And that's...
So is that panic for us, for the everyday person? Like, should we worry? Because
I believe so.
Yeah.
I mean, I think this is a sign of things to come. I think once bank runs start, they're really difficult to stop. Because when people start pulling their money out of the banks are no longer able to, they're going to run out of money. So they're going to have to be forced to sell assets, which they don't have. So they're going to have to sell off their entire business. And so you're going to, Canada's going to have, I mean, there's definitely exposure. If
in the U.S., all these little banks are going down.
Sure.
So is everybody's going to gravitate to the big banks, right? So that would be the solution.
It's not a solution because the big banks are no better off.
Yeah, yeah, exactly.
This is a systemic issue. This is not just an issue for the smaller banks. This is the big banks are going to have issues as well because of the rate hikes that we've seen. I think we're 10 rate hikes in a row. So, I mean, I think this is a systemic issue, and the big banks are going to feel pain as well. So it's not like they're only going to win in this. But right now, JP Morgan's taking advantage of the situation. I'm sure
they're buying these banks at
pennies
on the dollar.
And they're bringing in all these hundreds of millions of dollars of deposits, billions, and they're paying pennies, literally. And
well, Silicon Valley was the first one on the news. Now First Republic, that's 2 major California banks that failed. I mean, these are pretty big banks. Like, these aren't small time.
Yeah, so
small banks. That's terrifying in a way. I think people are starting to, and now you're seeing this in mainstream media more. I think people are just starting to wake up.
Well, I think the biggest difference between now and 2008 is the banks that are failing are much larger than they were in 2008. So
Okay.
3 banks that have gone down would be 3 of the top 4 banks of 2008. They're that big. They're much bigger than the banks that were failing in 2008. So that's kind of the things that make people nervous right now. It's not just little small mom and pop banks.
Yeah, exactly.
These are large banks.
Yeah.
And
we're talking billions and billions of dollars.
Yeah. So I truly do believe the 2023 bank failures will be much, much worse than 2008. And from a dollar standpoint, it's already almost at that level. It's just wait until the other banks start falling.
And just like you said, it's starting this. I got this article off USA Today. U.S. banking crisis. Close to 190 banks could collapse, according to a study. And that's in the USA Today. Yeah. I'm surprised that's on mainstream media. I mean, that's a terrifying headline.
When you see, so I mean, my guess is it's probably going to be a bigger number than that.
Yeah.
I mean, if they're willing to say that number, I mean, it's probably going to be much, much bigger than that.
Yeah, that is.
And I'm not saying it's all going to happen this year. Like in 2008, those banks went down between 2007 and 2009, right? So it was over a 3-year period of bank failures. So we'll probably see something very similar. But it might even happen in a much quicker fashion this time around. If the bank runs get serious enough, it could really take down the entire banking sector.
Wow.
Including the big banks.
Including the big banks. Now that's terrifying.
Because why would you trust a big bank if 99% of the other banks went down? I mean, I wouldn't.
Yeah.
Why trust? This bank is not any safer than this bank.
So banks are collapsing like dominoes. What could come out of this now that people are discouraged and they're taking their money out of banks? Where's the safe haven? Where are people going to run to?
I mean, I think right now it's precious metals is probably the top of the list.
Right.
Gold and silver. People want their assets in their own possession, or they want just take the cash out of the bank and keep that in their possession. Cryptocurrency is another place that people tend to go to, or people will buy real estate, buy commodities, buy physical, tangible assets. I think that's the big transition you're going to see is people moving away from financial assets and moving them into hard assets.
Right.
So that's usually what happens when you see a situation like this with bank runs. So people have to put that money into real, tangible things because, I mean, this really could happen quickly where the majority of banks go down in a very, very short period of time if the bank runs become significant, which I think is a really serious threat. Because when people start taking their money out of the banks and they're lined up, it's not going to be one bank. They're going to be lined up around all the banks. And then at that point, these banks are fractionally reserved. They don't have the money to actually give you. Okay, they only have $1 for every 10 that's out there. Right. So when 10% of the people go ask for their money, they run out. Now they have no more money. So then they're going to be forced to sell assets. At that point, who's going to buy it up? Banks don't have the assets to buy it anymore. So you're going to have the government have to bail out again. So that's likely what you're going to see happen. The government's going to just continue, and the Federal Reserve is just going to continue to print trillions and trillions of dollars to help these banks get through it. And all that's going to do is tank the dollar. I mean, that's where gold and silver will thrive. And that's where I believe the best opportunities will be in the coming months and years.
Wow, that's we're heading to some scary times, and I think, I just like you said, I think precious metals is just gonna people are gonna really. I think people got to get educated. I think people are a little bit scared right now, and they don't know where to turn. And I'm glad there's a podcast like this because you're not getting this information. Gold. The mainstream media is not reporting on gold. It's
quiet for sure.
It's been very
and it just
quiet.
Hit an all-time high. I mean, that's big news.
Yeah,
all-time high.
Why wouldn't that be all over mainstream media?
And silver just hit a 52-week high. I tried finding articles about it. They're not out there.
I know that's crazy to me.
And that's going to continue. I mean, that's always the way it's been, and that's always the way it will be. Mainstream will never jump on.
CNBC has not even uttered a peep about gold. That's crazy, and it's reached its 52-week high, right?
But again, and there's a reason for that. If people see that gold is skyrocketing and gold's doing well, and they look at their stock market portfolio and it's performing poorly, they're gonna start pulling their money out of the banks and out of their investments and moving them into precious metals. And the system can't afford that to happen. There's a reason they keep the prices of gold and silver suppressed, and that the mainstream media doesn't talk about gold and silver. And when they do, it's usually in a negative way.
Yeah.
So I mean, they can't allow that to happen because when people start pulling their money out of the banks and putting it into gold and silver, now you're putting that bank at risk of failure.
Right.
Because again, they're fractionally reserved. They don't have the money to afford for people to take all of their money out. You know what I'm saying? Like that's the risk.
What's causing these banks to collapse? Is is it because of people are starting to?
Yeah, for sure. That's a big part. I mean,
that's a big part.
Well, the other part that's causing the systemic risk here is the fact that the central banks have raised rates so quickly. This is historic. I think the percentage is like over 5,000%.
So the Fed's just increased the rates
again.
Yeah.
Yes. 2 days ago, the Fed increased by another quarter point.
Mm-hmm.
I think we're at 4.75 or something or 5. Is it 5% now? I don't even remember. So in my opinion, they're probably going to be done now. They'll probably pause. And have been rumors that is what's going to happen in June, that they may be more likely to pause than continue raising. But the fact that they've raised rates so rapidly over the past 12 months has caused these banks to fail. That is the main reason. It's not that people didn't start pulling their money out for no reason. People started pulling them out because the banks started failing. But the banks started failing because of the high interest rates rising in such a quick period of time. That's the exact same thing that happened in 2008. Rates went to the exact same level they're at right now. Banks all failed. Now we're at the same level of interest rates again. Banks are failing. They have no ability to raise rates any higher than they're at right now, or the entire banking system will collapse.
So they're definitely going to slow down.
They can't raise any more, and you'll see it. Between now and June, you'll see more bank failures. In my opinion, there's no question. So when there is more bank failures, the central banks are going to have no choice but to stop raising, because they cannot collapse this unless they want the banks to fail and they want the system collapse. I mean,
so is this an agenda or a conspiracy theory? Call it what you will, where this is happening, so only there's a few major banks left in the U.S., just kind of like what's happening in Canada, where there's going to be only 4 or 3 or 5 major banks left in the U.S.
I think for sure. I think this
buying
is definitely
up all these banks at pennies on the dollar.
I think that is the goal here, to consolidate all the banks, to
Right.
bring it from 4,000 to 5 or 10.
Yeah,
or
exactly.
20, whatever that number is.
Yeah.
I don't really know, but it's definitely going to reduce the amount of banks by at least 90%. And there's a few reasons for that, but the main reason is they are implementing central bank digital currencies in the very near future.
Right.
And they need somebody to run that for them, and they're going to need to use the banks. But to try to coordinate something like that with 4,000 banks in the United States
is impossible.
It's going to be much more difficult.
Very difficult.
But if you're just dealing with a handful of banks like Canada has, it'll be much easier to just implement the system, usher it in, force people to use this new digital currency, because they're going to use the JP Morgans, the Wells Fargos, the Citibanks. That's who they want to deal with. They don't want to have to deal with these small mom and pop banks as well. And again, it allows them to control our money in a much easier fashion when it's only 5 banks versus 4,000 banks. So I think that's a big part of it as well.
Wow. Yeah, that's crazy. There's a CNN article. I'm not usually quoting from CNN, but it's kind of interesting. Something's about to break. Why Wall Street is freaking out about banks. So the feds are saying banks are fine. The Treasury are saying banks are fine. The banks are saying we're fine. But Wall Street, everybody sell. The banks are on fire.
That's Wall Street, the magazine, or I mean the
website.
About
Wall Street in
general.
Yeah.
Well, I mean, I think common sense.
I don't even know. I can't believe this came from CNN, or this could be fake news. I can't believe.
I mean, you just got to ask the general public if you really want what the word on the street is, and people are nervous. I mean, how can obviously they have to say that banks are safe.
Yeah,
they have to. Imagine the U.S. Treasury comes out and announces the banks aren't safe.
Yeah, exactly.
You'd have bank runs that day. So they're always going to say that from now to the end of time.
Right.
So what they say is completely meaningless, in my opinion.
Sure.
But all you have to do is look at reality. You've never seen banks fail at this large in that short period of time in history.
I know.
These banks are much, much bigger than in 2008. So this is, in my opinion, is much scarier of an outcome than 2008 because they were able to paper over it and print money and bail out the banks. And as much as it was a difficult transition, a difficult period, there was a recession. People did lose a lot of money on their investments. I just think the potential risk here is much, much worse. It's a systemic risk on all banks because I think the deposits are much greater than they were in 2008. How are you going to bail out, if the money's 10 times it was in 2008, how are you going to bail out all of these banks? You're not going to be able to unless you completely crash the dollar and we go into hyperinflation. That's my point. They're not going to save all the banks. They're just going to let the big banks continue to consolidate, continue to buy up all of these smaller banks for pennies on the dollar. So I think that's what you're likely going to see.
Oh, for sure. There's no doubt about that. That's heading in that direction. And then how is this affecting the dollar? Like, is the dollar collapsing?
Well, you're seeing it. Gold's at all-time highs right now.
Right.
Silver's at 52-week highs. People are panicking. People are pulling their money out of the banks. They just don't trust it. Just yesterday alone, I would say we got 20 calls, just people just saying, I want to set up a meeting. I want to look at ulterior. I want to look at gold and silver. They actually say on the phone call, with all these banks failing, I'm nervous.
Right.
This is real. That's the real statement.
And they should be looking to that.
Nervous. I mean, why wouldn't you be nervous in this situation? This is, I personally don't keep large amounts of money in the bank. Just whatever I need to pay the bills. It's not that I'm so paranoid. It's just why take the risk?
Exactly.
Not to mention, cash is losing 15% a year to inflation. So what's the benefit of having money in a bank if you're not going to, unless you need to use it for your business or use it to pay bills. But other than that, why keep large amounts of money in a bank?
You're only insured so much, right?
But the insurance is, that's not going to work. I mean, the insurances don't, the FDIC, for example, they don't have the money to be able to pay off everybody's $250,000.
Right.
They just don't have it. Not to mention they're spending a lot of money right now with all these bank failures. So they're gonna run out of money in a very short period of time. And when that happens, how are they gonna bail out everybody? They're not. So they like to tell you about this insurance because it keeps people comfortable and safe, and they feel like, oh, my $50,000's fine. They're insured up to $250,000. You're not insured at all. I mean, don't believe that for a second, because when all the banks fail, there's no way the FDIC will be able to give you your $250,000. And if they do, your money, that money's going to be worthless at that point anyway. So that $250,000 will be worth like what $25,000 is today. Do you know what I mean? Because the inflation will be that severe.
Yeah, exactly.
Because you're talking about tens of trillions of dollars. I mean,
oh, for sure. Yeah,
it's insane. I mean, people have the right to be nervous. And
so let's talk about a little bit of some banking lingo. So bank runs and there's bail-ins. Mm-hmm. So a lot of people don't know what bail-ins are. They understand bank runs and people are pulling out their money, right? Mm-hmm. But what are bail-ins?
Sure. Bail-ins is when the banks are able to actually use your funds to pay creditors. The banks are allowed to take your money. For example, 20% of, let's just say you had $100,000 in the bank. The banks legally have the right to say, sorry, we're not doing well financially. We're going to take 20% of your money to pay off of our creditors.
That's incredible.
Canada passed that in their legislation a few years ago.
The U.S. has that too, or no?
They do. I'm not as familiar with what's written in the U.S. and how that, but I know in Canada, for sure, they have the ability to take your money and give you a haircut like they did in Cyprus, in Greece.
That's incredible.
What percent that will be, I have no idea. But why put that into legislation if you don't believe you're going to use it at some point? Will they? I mean,
that's worst case scenario, obviously. Yeah.
Well, worst case scenario, they take it all, and your money.
You don't have any,
and your bank's closed and your doors are
we
shut.
Went belly up. Sorry, we have no money.
Bank runs are honestly worst case scenario. It's worse than bail-ins. Like if you're going to take 10-20% of my money, hey, you'll still be able to live.
Yeah.
But bank runs, that would really collapse the banking system, where your money would be gone completely. Because, like I said, it's fractionally reserved. The banks don't have your money. They're taking your money and they're investing into risky assets. So they only have 10% of the money that you deposited, right? They don't actually have your money. So if everybody came to withdraw their money from the banks, after 10% of those people withdraw their money, the banks would have no more money to give.
So let's say if I had $500,000 in the bank and I went, can I take that out in cash?
You can order it. I mean, it will be difficult for sure. How long it would take?
I wonder if there's a lot of loopholes you have to go through, like, and a lot of...
for sure. They ask you a lot of questions. Yeah. They want to know what you're going to be doing with that money. The banks do everything in their power to keep your money in their accounts because it's that important to them. Yeah. They're seeing, especially these regional banks in the U.S. right now. I mean, I can just imagine what they're saying to their customers to try to keep their money in there, because they can't afford to give everybody their money, and it would collapse their institution.
That's crazy. So what do Canadians now? Are Canadians need to worry? Obviously, it's a different story here. We are already at the point where we only have five major banks, maybe 5 or 6. As they're reading these U.S. headlines, do Canadians need to worry about this?
I can't see why not. Yes, I think they should be worried. Now, do I think they should be as worried as people with their money in regional banks in the United States? No.
Yeah.
Because again, I mean, I think we have better regulations in Canada with our banking system. Our banks don't take on the same amount of risk as the United States banks do. And again, our banks are larger as well. They're not the small mom and pops. These are big banks in Canada. And I think the government will likely bail them out if they do have any financial difficulties. But in the end, if there is a bank run that happens in the United States, you're sure to see bank runs here in Canada. And that will cause major risk into the whole banking system going down in Canada as well. Because you can't fight off bank runs. Once the bank runs happens, it's game over. It's game over for the banks or the dollar. And they're going to take their choice at that point. I mean,
wow.
Because the banks don't have the money. So how is that customer going to withdraw their money? The only way is if they get bailed out by the Fed. But you're talking hundreds of trillions of dollars. So your money would be worth confetti at that point anyway. So
exactly,
bank runs is the end game. I mean, when you see that at a national level, it's over because it won't just be in the United States. If you see bank runs in the United States nationwide, you're going to see bank runs in Canada. You're going to see bank runs in
all over the world.
All over the world.
Yeah.
And I believe that day will come one day. You're going to see bank runs all over the world. And I don't think we're that far away from it, to be honest.
But I think, how can they stop that? Can they stop that with the digital currency they want to enforce?
Oh, yeah. I think they want to implement those.
Yeah.
Or actually, I mean, again, they need a crisis to bring in these central bank digital currencies, I believe.
Yeah.
I think they need to have a crisis before people will accept them.
Right.
So they may have this banking crisis first and then bring in the central bank digital currencies.
Right.
But again, that's why they want...
And make it very attractive. Where they'll offer, hey, sign up here, you get $1,000 in digital currency.
Well, yeah, you just lost all your money in your bank,
exactly.
So they got to do something. So here's your central bank digital currency account. We're going to put $20,000 in it, and every month you're going to get $1,000 or $2,000 or whatever those numbers are.
Right.
But I do see that's how it's going to play out. I think they're going to give you incentive to open up a central bank digital currency because why else would somebody open one up? I mean, there's no chance I'm going to open one up, but people need that money. And the government's giving it to you.
Right.
People are going to rush to open up that account.
Now, obviously, I'm not a fan of CBDCs, right, where the government... so how do we stop that from happening? Because I think that's the end game. Once you're there, that is total control.
So you are seeing some states ban it.
Yeah.
In Florida, for example.
Yeah, Florida
It is.
came out.
Yeah, it's total control. I mean, they're going to be able to control what we do with our money and whether or not we are able to spend it or not, or force it to lose all of its purchasing power in 12 months, for example. They can, you know what I mean? They may force you to spend it within a certain amount of time. Obviously, they're going to make sure you can only spend it on certain things. You can only travel twice a year or something like that. You can only buy so much gas. You can only buy so much red meat. There's going to be restrictions. That's the whole point of central bank digital currencies, for the control of us.
Yeah. So if your politicians are for it, you know that's not the politician to vote for.
That's where it's going to need to stop. I mean, and you're seeing, like I said, Florida. I don't know what other states are.
We don't know. Like Ron DeSantis right now, we don't know where he stands. He's done a great job in Florida. There's no doubt about that. But he did come out and say, we're basically banning this. Yeah,
it's great.
I know that's a good sign.
But the bad sign is, where's the other leaders of the states coming and saying the same thing? They're
exactly.
Not. And in Canada, same. Nobody's really saying no.
I'm definitely not here.
Europe, they're coming. Yeah, nobody's saying no.
If people want to see, right, China has got the social credit system. That's a perfect example of where CBDCs are going.
It's exactly where they're going.
And that's exactly how it would be.
It's frightening. It is frightening.
And you're only lying to yourself if you think otherwise,
No, I agree. I mean, I think central bank digital currencies are coming. But again, if the politicians aren't going to stop it, it has to be the people.
Yeah.
And then you're going to have to see people rebel and say no. Problem is, they know that. They know we are going to push back. That's why I do believe they're going to have some type of event, some type of catastrophic event where people are begging for this other currency. That's
or else you're going to end up like France right now. France is protesting.
Well, I think you're going to see that no matter what.
You got millions of people protesting, and that was ignited just by moving.
It's a minor thing.
What was it?
62 to 64 years.
The retirement age.
That's not.
But that's built up stuff. A lot of that is people in France are rebelling against the WEF, right?
Sure.
The World Economic Forum, right? And I think that's another thing. Where do these guys are like? The World Economic Forum is all tied into this stuff, right?
Of course.
They're
They're behind a lot of it.
yeah,
And
exactly.
they kind of came out of nowhere.
Yeah, and who elected the WEF? I know I didn't, but yet they're making all the decisions. It's insane to me.
That's
insane.
where we need to push back.
Yeah, definitely.
And unfortunately, I don't see Canadians as the country to push back.
Yeah.
I mean, hopefully.
Well, we did have the Freedom Convoy that was very, that was well respected around the world. And
but again, we could have pushed back a lot harder than we did. Like, look what you're seeing in France right now.
Yeah.
Now, that's based off of raising the late age of retirement from 62 to 64. Now, imagine that you lost your pension.
Yeah.
Imagine people on the streets in that situation. You're talking about total chaos. And that's, in my opinion, at some point will happen. I mean, there's no way the governments are bankrupt around the world, period. Right. How are they going to be able to pay these pensions? They don't have the funds. They're not going to be able to create the revenue. They're not going to be able to tax people enough to get this money to be able to pay these pensions. Where's it going to come from? I mean, yeah, if you have the ability to print and print and print, sure. But let's just say you get your pension, your $5,000 a month. Well, maybe that $5,000 is only worth $10 now, because the amount of money that the government's going to have to print to give you that check. So you may still get your pension check, but it's going to be worthless. It's going to be like, you know what I mean? You're not going to be able to buy groceries with that pension check. And right now, some people are able to live off their pension check. That's not going to be the case in the future. So either they're going to just tell you, sorry, pensions are no longer around, you're getting nothing, or you get your check, but it'll be worthless.
Yeah,
you won't be able to live off of it.
So enough of this black cloud that we're putting on top of us here. But the thing is, and that's why people come to this podcast, right? Is for some viable information. It's okay. There's alternatives here, and there's precious metals, gold and silver, that are just like you said, 52-week highs. Now is the time to get in. It's affordable now. It's not going to be affordable as things get bad and worse and worse and worse. Yeah. You won't be able to afford gold or silver.
Not only afford it, you won't be able to get it.
Yeah, that's another thing.
That's the risk.
Oh my God.
People talk about it all the time, silver being unobtainable. And I think we're months away from that happening. There's not a lot of above ground physical silver. It's going to run out, and in my opinion, it's going to run out very soon. All you need is one billionaire to just come out and buy all of the above ground physical silver in the world in 1 minute. That's how easy it is. And that's what happened in 1980. The Hunt brothers came into the market and just bought it all up. And
wow.
It's really that simple. I mean, one person can come in and collapse and make all the physical silver run out, and that would collapse the banking system as well. I mean, I'm not going to get into how that's tied, because it is a deep discussion, but I mean,
that's for another episode.
Silver is very important to the financial system and to the U.S. dollar. So when silver does go to those high prices, it's game over for the U.S. dollar, and I think we're heading there very soon.
Yeah, and you're seeing that, and that's why people need to. You got to get in now. Now is the time, like you said. And
I mean, if you don't have any exposure right now, you have to have a sense of urgency in you.
Yeah,
you should almost be in a panic. I mean, because you're not rushing into buying a new asset. I'm not telling you to rush in to buy Bitcoin. That's only got 13 years of history. Gold and silver have been money for 5,000 years. Okay, your money and your cash in your bank, that's currency. It's fiat currency. It's going to lose value, eventually be worthless. You need to have that cash or money in the bank in hard assets that are going to go up in price, and protect yourself from your purchasing power, and protect yourself from the inflation that we're going to see run over the next several years. Because you think the inflation's bad now, you haven't seen anything yet. It's going to get 10 times worse. They just started bailing out the banks. There's a lot more banks to come. That is going to cause insane amounts of inflation. I mean, so I think people really need to do their homework. I'm not telling you to rush out and buy it, but rush to learn about gold and silver. Understand what it is, why you're buying it. This is insurance. I always tell people gold is insurance.
Right.
Everybody has life insurance. Gold in your portfolio is way more important than life insurance, in my opinion. I mean, you cannot have all of your assets in the banking system, because if the banking system goes down, you have nothing. You've worked your whole life for those assets, for that money. and now it's going to be worthless. You cannot take that kind of risk. And maybe there is only a 5% chance of that happening, but you can't take that chance on your entire family's livelihood. You have to have some assets outside of the system. So if it were to collapse and the dollar collapses, you have tangible assets that are going to go up in price, and you're going to still be able to live your same life that you used to before. But if you don't have that gold and silver in your possession, and your money's in the financial institutions, and we do go through hyperinflation, I mean, your money's going to be worthless. So at that point, you're going to be too late to the game to rush into gold and silver. Like I said, it's going to be unobtainable, or the price is going to be 10 times what it is right now. So the opportunity is amazing, in my opinion, especially on the silver, because it is so cheap, historically speaking. In 1980, silver was $50 US. Today, it's 25. It's the only asset in the world that's half of its price from 42 years ago. It's absolutely insane. And there's a reason for that. The banks manipulate it.
Exactly.
And they'll continue to manipulate it until the physical silver runs out, and then it's game over for them. And I think we're very, very close to the physical silver running out in the world. I'm waiting over 2 months. Right now, we're seeing the highest levels of demand for physical silver in history. We're also seeing the lowest levels of inventory for physical silver in history. Okay, so it's the perfect storm when it comes to, not to mention all of the use cases for physical silver in the industrial world with solar panels and electric cars. They both require huge amounts of silver. And Europe and the United States have huge green initiatives. So these solar panels and electric cars are coming whether you like it or not. Where is this silver going to come from? We're already seeing the worst shortages in silver we've ever seen in history. Where are they going to get this silver for the solar panels and the electric cars and the retail demand? So you may see the governments come out and ban retail investors from buying silver just because they'll call it a national emergency.
Right, yeah.
We need it for phones. We need it for
Good
solar.
point.
We need it for all these reasons. We cannot allow you to be purchasing it because it's too important to the day-to-day. I mean, that may happen. I mean, in 1933, they took our gold. The United States forced people to sell their gold back to the government at a set price. You may see something like that again. So, I mean, it's really hard to say. But silver, I think, to me, is the best opportunity out there when it comes to any asset, just because it is so cheap historically, and the demand has never been greater than it is today, and the supply is declining year after year. So just last year alone, the shortfall was like 240 million ounces of physical silver. Shortfall. So where are we going to get that 240? Every year, the last 4 years, there's been a shortfall over 100 million ounces. So if it's 240 million this year, I'll bet you next year is going to be over 300 million because of the growth and the demand on the industrial side of the silver. So where's this silver going to come from? You can't just keep going in the hole and the hole and the hole using reserves and the reserves will run out. The COMEX is sitting on the least amount of silver they've ever sat on in inventory. Wholesalers are sitting on nothing. The mints are sitting on nothing. The U.S. mint created barely no silver eagles last year. They only made 15 million. They usually make 50 to 60 million. So they're down 75% production. Just, in my opinion, it's because there's no silver. They don't come out and admit that, but why are you only producing that many? The premium skyrocketed on the silver eagles. They're about 75, 80% premiums. Never seen that before, ever. It's because they're hard to get. You can't get them.
Wow.
So I think it's just a matter of time before you can't get any silver, not just the U.S. Eagles. You're not going to be able to get anything. No Royal Canadian Mint, no U.S. Mint, no private minted stuff, nothing. Unless you're willing to pay your neighbor because who's going to want to sell their silver in that environment?
Exactly.
Unless you're willing to pay me like 10 times what I'm paid for it, because that's going to be the reset of the price when the physical silver runs out.
Well, silver's going to turn into gold. Basically,
in terms of the price,
because it's going to be. Gold will gold always be more than silver? No.
Why should it?
Yeah.
What's the growth in use cases for gold right now?
Yeah,
there isn't any. Gold's used as money and in jewelry. Okay, silver has new use cases every week. Silver purifies water. Silver is used in healthcare. Silver is used in this whole new AI world we're entering.
Yeah,
is all going to require silver. Yeah. I mean, you got the Silk Belt Road in China that they're building all throughout Asia and the rest of the world. That's going to require lots of silver. Where is all this silver coming from?
Yeah,
it doesn't exist. It's a very scarce asset. that is super, super, super cheap when you look at the historical.
Unless
price.
Elon goes on Mars and discovers silver. And then it's game.
That's possible. Anything's possible, but I mean, who knows?
Oh my God, that's crazy. Silver to me is more an attractive investment than gold is.
No question. No question. There's way more upside. So gold from 1980 is up 150%.
Yeah.
Not great,
Mm-hmm.
but at least it did go up. Silver's down 50%. Explain that.
Yeah.
It doesn't make any sense. Not to mention the money supply increased 18 times since 1980, and silver's half of its price.
Mm-hmm.
In theory, to keep up with the money printing, it should have gone up 18 times. That's $900 an ounce silver. That's where I think we're heading, to be honest with you. I think we'll be in that range. We'll probably get into above 1,000 as well several years down the road. But I would say by 2030, I don't see how we don't see $1,000 an ounce silver. But the crazy thing is, you don't have to wait. You may not have to wait till 2030. With these banks going down now, I mean, this is going to lead to major, major, major inflation. And you could see silver, if the physical silver runs out and the COMEX has to shut down, I mean, you could see silver get to $1,000 in 12 months.
Mm-hmm.
It can happen that fast.
Wow.
But that's not a world that you're going to want to be in. It's going to be a scary world.
It will be.
I mean,
well, because all the stuff that you use silver to produce stuff, right, would be more expensive, right?
Well, that
because if it's $1,000 an
that,
ounce,
but if silver's $1,000, that means we are now in hyperinflation situation where people are not going to be able to afford the day to day. There's no way they're going to be able to afford groceries, and pay their mortgage, and pay their car bill. That's what you're going to see: a consolidation. Families move together, selling their cars. So you're going to lose their jobs in that environment as well. So, I mean, it's just going to be a really, really hard time that we're going to have to go through. And I don't really see any way out of it. I don't see how we go through the next 10 years without going through this very, very difficult transition period. And I think we're very close to it starting. And I think it already has with these bank collapses. I think you're at the beginning of the end of our financial system.
And there you have it, folks. Run out and go buy precious metals immediately. Protect yourself. We are headed into some crazy times.
We're already in it.
Yeah, we're in it.
We just don't realize it.
Yeah,
because it hasn't gotten to that level yet.
Yeah,
but it started for sure.
Yeah.
To be honest, it started in 2008.
Yeah.
I mean, they should have never bailed out the banks then.
Yeah.
And that was, and if they do it again, your dollar's toast. And you're going to go through hyperinflation. There's no way around it.
But this is where millionaires are made and billionaires, right?
Well, that's
at these times.
Yeah, because everything's
like you said,
not somber. Everything's not black cloud. This is, to me, I'm excited about this transition.
Right.
I mean, that old system was not a good system to be in. It's a debt-based economy. It's fractional reserve bank. Everybody's just over-leveraged right now because that's the way the system was designed.
Yeah.
I mean, it's a consumption-based system. It's a debt-based system. It can't sustain itself. Mm-hmm. So we need to get off of that old archaic system that always collapses. Every time it's ever been implemented, it always goes to zero and collapses. That's the whole purpose they put us in that system in the first place.
Right.
To crash it, to be able to control us. So that's really all by design. But if we can go into a new system that is not run by central banks, where we use cryptocurrencies, for example, as our money with no third parties.
That's wishful thinking.
It's wishful, but hey, man, I think it's happening.
Yeah, I hope it does.
People are going to rebel against these central bank digital currencies, and there will always be an out. But the only way we cannot get stuck into going into these central bank digital currencies, we have to fight it. We can't allow them to bring it in. You got to just say, no, I'm not using it.
Yeah.
If everybody says no, you're going to have to do something else.
Yeah.
And we'll create our own. We have our own money. We already have Bitcoin, for example. Mm-hmm. We don't need central bank digital currencies. Bitcoin can be used by the entire world, used for payments, used for store of wealth, used for everything. Not just Bitcoin, but there's many cryptocurrencies out there.
Right.
So, I mean, there's better ways for our world to function in the future. And that's why I've always been so passionate about Bitcoin, because that is what will save the people. That brings the power back into the hands of the people. The reason humans are slaves today is because of the banking system. Okay, that's by design. They own you. They own the money, they own you. Because they control everything that happens. They control the interest rates. They control the money supply. They can make your dollar worth nothing tomorrow, or they can make it worth a lot more. It's their choice. But their choice is to obviously crash the dollar, in my opinion. That's by design what's always happened throughout history. Every empire's collapsed. They've all collapsed for the exact same reasons. Hyperinflation. They've all printed too much money, promised their citizens too much. And you're seeing it already. The U.S. is close to $32 trillion in debt. I mean, they're bankrupt.
Yeah.
The whole world's bankrupt. Canada's bankrupt. Ontario's bankrupt.
Yeah, exactly.
I mean, sorry, you have a pension with an Ontario government. Why would you trust that you're going to be getting that in 20 years from now? I would never trust to get money from somebody who's bankrupt today in 20 years. If you're bankrupt, where are you going to get this money from?
Yeah. You're trusting people that are terrible with money. Managing money.
Disastrous.
Yeah.
Disastrous.
These people are like I could have did that. And
Anybody
I don't have a financial background. I could tank the economy no problem. I'd be really good at that.
Look at what they've done. Like the last 10 years they haven't raised interest rates. Now they raise them.
Yeah.
Way too late.
Exactly.
You let this bubble grow way too much. Like that's who you're listening to. People who have no common sense. They've been wrong and wrong and wrong and wrong and wrong and wrong. Yeah. And they're wrong again now. But they shouldn't not continue to raise rates into this.
Exactly. And they're not terrible managers. They're just, I believe, liars. There's an agenda,
and
right?
An agenda.
Exactly.
Sure. It's a combination.
It's for total control. And if you don't believe that, you got to be super naive in life. I'm sorry. Digital currencies, digital currencies are good, but not run by the government.
Not central bank digital.
Yeah, exactly.
Central banks
so
are
CBDCs are for total control. There's going to be no benefit in that.
Zero benefit. Because it's not like they're going to limit the amount of CBDCs.
Yeah.
They're going to just print like they're doing on the old system.
Yeah, exactly.
So we're just the old system, but now on a blockchain, using blockchain technology. But what they're going to use that technology is not for the better of the people. They're going to use it to control you and not limit to how you spend your money. And that's what it's all about.
So let's talk about a little bit hard assets. So if you diversify your portfolio, and I think people want to know this is good sound information, because if you had $100,000, where would you put it in? You would, what percentage?
I had to pick one? Oh.
No, what percentage would you put in precious metals? What percentage would you put in Bitcoin?
100,000 net worth or $100,000 portfolio?
No, let's say someone had $100,000 and they're coming to you for some financial advice.
Sure.
How much percentage would you put in precious metals? How much would you put in Bitcoin? How much would you put in real estate? You know what I mean? How much, like hard assets?
Sure.
So you're kind of away from this.
Good question.
Yeah.
I love real estate, but I wouldn't be buying today.
Okay.
You always you can't, just because real estate's been a great investment, you can't just blindly buy real estate.
Right.
You have to, everything goes in cycles.
Yeah.
We are in a downturn in the real estate market. Obviously, there's a slight tick up right now because the Central Bank of Canada paused on interest rates, but that's just a slight tick. So you have,
but real estate's more dynamic, right? You can buy like a rental property and they'll pay your mortgage. That stuff is positive, right?
Until they can't pay rent anymore.
Yeah, and then you're stuck with it.
We haven't been in that situation yet. We need owning real estate during a financial collapse is not a good thing.
Yeah,
and we are entering into a financial collapse.
Right.
But buying real estate in a financial collapse is amazing.
Right.
At the tail end, 2008 created so many millionaires and billionaires because of the opportunities it created. But if you bought these properties in 2006 or 7, you got murdered.
Right.
Do you know what I mean?
Yeah, exactly.
So, and that's what we're in right now. So if you're buying real estate right now, you're going to get murdered, in my opinion.
Yeah.
Okay, can it go up for 6 months? Yeah, of course.
Yeah.
But the end game, at some point, you're going to see everything crash. All asset prices, bonds, stocks, real estate. And the only thing that is going to go up is commodities. Okay? Because what's going to happen is you're going to be in a hyperinflationary environment. People are going to be taking their money out of stocks, out of bonds because of the collapsing that is happening. People are going to get nervous. They're going to pull it out. When they do that, they're going to need to put their money in something. That's when they're going to put it into gold, silver, and other commodities.
Okay, so diversify this portfolio.
Oh, yeah.
Back to that.
I mean,
you would put like 25% in.
I would have some cash.
Some cash. Okay.
because there's going to be opportunities, right? There's
Right.
no reason
Oh,
to go
exactly.
all in right now.
Yeah.
There's going to be major opportunities in the next 12
So
months.
keep some cash.
Keep some cash,
Okay. And then the precious
10
metals,
to 20%,
20%.
10 to 25% in cash.
Okay.
I mean, maybe 50% in precious metals.
Okay.
If it was me, I'd put it all in silver.
Yeah.
But if you want to be diversified and have gold and silver, that's fine as well. I just think silver is going to outperform gold, but tenfold.
Wow.
So for that reason, I don't see it. I love gold long term. I
Mm-hmm.
want to have a lot of gold, but I want to make money in silver first and then convert it to gold and get 5-10 times the amount. You understand?
Yeah. Exactly.
And then I would have a little bit of cryptocurrencies, some Bitcoin, Ethereum, maybe 10% to 20% of your portfolio, 5 to 10 to 20%. Why not? I mean, there's so much upside there. This is a new technology. This is something, that's what you want to be in. You want to get in at the beginning. Not a lot of people own cryptocurrencies right now. People aren't using them yet. Right. This is the beginning. This is the infancy stage. That's where you want to buy assets, not buying Apple or Google or Amazon. These things, where's the upside there? Honestly, I mean, people always or banks. People fall in love with these investments in the stock market because it's done so well. That's in the past. We're in a 14-year bull market in stocks. You think we're just going to keep going higher and higher for the next 10 years? Of course not. It has to be a correction, and we're in it. And how ugly it gets, I have no idea. But my guess is you're going to see 70 to 80% decline in the stock market. So I think there's going to come a point where the gold and the Dow Jones is 1-to-1. Because if you go out throughout past history, you're going to see several times over the past several decades where gold and the Dow Jones are the same price. Okay, right now the Dow Jones is 34,000, gold is 2,000. Big disparity.
Yes,
they're going to go 1-to-1. Where do they meet? My guess is in 10,000 range. Is where I would say maybe it's 7,000. But that means the Dow's got to go from 34,000 down to 10, and gold's got to go from 2,000 up to 10.
10.
So I don't see any reason to put money in the stock market right now. I mean, I'm currently shorting banks. That's how I play the market, but I'm not taking any long positions. Yes. Well, can the stock market go up 20% from here to the end of the year? Yes, of course. But that's not exciting to me. I'm not taking that kind of risk for 20%. Silver, the risk is very minimal, and the upside is astronomical. Bitcoin, the risk is high, but the upside is astronomical. Why would I take high risk on stocks if the upside is very minimal?
Mm-hmm. Good point.
So, I mean, people got to look at risk cycles, upside potential. I think that's what people don't truly understand, and that's why they don't buy cryptos or they don't buy silver. They don't truly understand the upside potential. So for you not to be in it, to me, that's too risky. People think crypto's too risky. It's too risky for you not to own crypto. Because if Bitcoin does go to $1 million and you didn't buy any, and you can buy it today at 28,000, 29,000 or whatever it is. And you don't have to buy a whole Bitcoin. Buy $500, buy $1,000, buy $10,000. So if you're right, and it does 100 times, that 10,000 is now $1 million.
Yeah.
Because there's no worse conversation than when your kid comes to you in 10 years from now and says, "Hey, Daddy, how come you didn't buy Bitcoin?" Or, "Daddy, why didn't you buy silver?"
Because I didn't watch The Gold Awakening.
Just, why take that risk? Just have a little bit. Have a little bit.
We are at a crossroads. That's it. Whether you go to the Great Reset or we're going to the Great Awakening.
I think it's both.
And
I think the awakening has started.
Yeah.
I think people are opening their eyes. They're asking questions. They're making changes. And I think that awakening is just going to continue. We are in the age of Aquarius, which is the age of awakening. This is... things are coming to us every day now. The truth is starting to come out about all things, and you're going to find out the truth about the financial system very soon. But that will be a sad truth. And unfortunately, I just hope people get prepared now.
And how you get prepared? You watch The Gold Awakening. We're now available on every major podcast platform.